Please raise your hand if you think that crypto is still attracting institutional money. Okay, I see that we will still need to convince some of them. Okay, Daniel, please introduce yourself.
Hi, everybody. My name is Daniel Vegue. I'm a partner at Block Asset Management, aka BAM. It's a boutique asset management based in Luxembourg. And we started almost 2017, and we have been investing in digital assets and blockchain since 2017. We try to attract institutional players to invest in all of you guys. So we try to translate what you do into the language of institutional players, financial managers, asset managers, and alike, in order to breeze and translate the communication to bring capital to your ideas.
Cool, thanks. Maurice?
Good afternoon, my name is Maurice Mureau. I'm the CEO of HODL, and HODL is a Dutch-based cryptocurrency firm offering investors, private as well as institutional, access to the cryptocurrency market via funds. We do that with a long-only strategy, and we started in the Netherlands and now expanding through Europe. We've spent the time of the bear market building, and we're now launching in Spain, Luxembourg, Swiss, and Gibraltar.
Yeah, hello all, pleasure to be here. My name is Lior Zaks from Israel. I'm the legal counsel of Stake Capital, and many years in crypto, actually since 2010. So been through everything, learned from everything, dreamed a lot, and also building things.
Cool, thanks. Very strong panel. Daniel, the first question goes to you. The crypto space has 1 trillion as a capital market, total capital. Capital markets at 330 millions. If we add private debt, private equity, private asset, we go to 575 trillions. This will move legislation, protocols, CBDCs. What's your take about that?
Yes, the first takeaway that I see from this meeting is that we are a $1 trillion market cap, more or less, and we need to attract people from the financial markets that they cover 330 trillions. And that's very important to put it in context. But they are very interested in the other assets that they don't have. What other assets they don't have? Private debt, private equity, and real assets. And this in total is $575 trillion. And that's very important for all of us to say, look, what can we bring? And many of you are doing this, the infrastructure, the layers, the ecosystem, for these investors to go via digital assets, tokenization, layer 1, layer 2 protocols into these private markets. And this will avalanche many of the changes that we are facing. Legislation is important, infrastructure, and I know you are in many spaces, in many circumstances, looking into these small ecosystems, but the real assets and the private markets, this 500 trillion, is what is going to be moving the needle of institutional clients. And they understand these markets. So whatever we build, Web3, real assets, infrastructure, they will make the capital that we need and the legislation for us to invest. This is very important. I'm sorry that I take the institutional part, but it's 330 trillion and we are only 1 trillion. So we have to move these guys, convince these guys that they put money into our ideas. Because if we are only moving around 1 trillion, this is not enough. And this is what I hear. I was this morning in a meeting with a family office here in Barcelona, few billions, more than 10 billions under management. Ask me how much they have in digital assets. So we need to convey the message, convey the infrastructure that this is the place that they have to be. And it has not been easy, but okay, this is part of my job. Thank you.
Thank you. Maurice, in an article from Consensus, we were given 5 main points to have institutions going all in: access, custody, monitoring, reporting, and compliance. I know that it's a lot to analyze indeed, but what's your take about that?
Well, we only have 20 minutes.
Yes.
I think the most important part is the regulatory part, which we can sort of shift all the other things under.
Sure.
In Europe, we got MiCAR coming, voting for the European Parliament end of this month. Hopefully it will come true. We're actually a bit advanced on the US side. When regulatory guidelines are there, it gets more easy. We've all seen Kraken and the staking thing last week, and why is this? Kraken was thinking they were doing stuff by the books, but the SEC didn't clearly point out what was allowed and what wasn't allowed, and how transparent you should be. So I think guidelines and rules should be in place. And then the first access point is custody. All the financial institutions want their custody in place. You've seen in the bear market in 2022, all major firms that have assets under custody or assets under administration offering cryptocurrency custody. So I'm talking State Street, Bank of New York Mellon, Citi, but also in Europe we got Société Générale, Casais. So loads of the big firms that already are offering custody in traditional assets have the digital assets now in place. And once the regulation is there more complete, I think that will be a very good driver for the institutions to get their money in. And then if you look at accessibility, I think that was the first point, very short. It needs to be improved, but technology is driving very quick. If we see the shift of the amount of developers last year that came into the blockchain space, it's been the best year ever. It's got parallels with the internet times when all the smart human capital was shifting to the Amazons, the Apples and the Facebooks, and they're now all going into blockchain. So I think the accessibility and the user-friendliness of crypto will be definitely on the good side. If you look at monitoring, risk monitoring, and obviously reporting, I think that should be in line with all the other assets they have, and that it should be easy to integrate that into their systems they already have. There's work to be done there, but it's definitely coming. So yes, all 5 points I think very valid. It's not a matter of when, but a matter of how soon everything is in place.
Thanks. Lior?
Yeah, so regarding regulation, I think regulation, you should think where is regulation coming from? Regulation is always coming bottom up. So there is no person that sits up high and thinks this should be the regulation or this shouldn't be. Regulation always is coming from the surface, from the bottom. And maybe institutions are waiting for regulation, but regulation are coming from you, from us. So if we are building things that are challenging regulation at some point or are innovative, then the regulators are looking on it. Maybe you need to be big like Kraken or whatever, and then the regulators are looking at it and then they change the regulation. Also, you as a small enterprise can work and discuss with regulators and bring the regulation, pre-regulation maybe, but you can do it. And if we look about this financial crisis that we had, like FTX and all this stuff, when you look on those cases, it's not a new things. It's not an innovationary crimes. It's an old things that people did, and regulators are looking on it and dealing with it, but there is nothing new there. Same when financial institutions, for them innovation is good. They look on innovation, they want to innovate, they look on the crypto industry, they want it, but they need the bridge. And the bridge is regulation. Whenever it will come from, it's good. If it will come from scammy people, then we're in a problem. If it will come from good projects, from people that will push the borders, help to build the regulation, it will come, and that's how it's happening. Yeah, I guess so. Every regulation is blessed because it's a bridge to the real world. Yeah, I can speak
Thanks.
a lot about it.
For institution, we have upside, like tech, DeFi, smart contract, and downside, like the price volatility, security. Do you think that downside are something easy to fix, that it will be just fixed and they will go all in, or how do you think it's gonna continue? Yeah,
I think we are always in an evolutionary process. I think we're always going up. No matter if it looks like we're standing, it's always on the way up. It's always a development process. So I cannot see the downside. Always look on the value, try to locate the value, go with the value, go with the good things, and we are always on the way up since 2010. Believe me.
Indeed.
Yeah, and if I could add,
Sure.
if you see that we're in a macroeconomic cycle where there's loads of inflation, and we actually have, I mean, if you've been in a few of these sessions, Ethereum with a deflationary system and a staking reward which creates yield, yeah, that's going to attract institutional money, especially when you get money in the bank and seeing with a 7.5% inflation that being halved in real terms in 5 years.
Yeah, maybe Maurice, we are very positive, although we talk with institutional clients, we are very positive. And from once, here in Europe we have MiCA, the new regulatory environment that is coming, and this is very powerful. From once, Europe is more advanced than the US. And this is very important. We are going to have custody regulation, we are going to have marketplace regulation, we are going to have infrastructure regulation. This is huge, and we should take advantage. We should not avoid going to the regulator and say, look, I'm building this, what do you think? We know already what they are thinking. So let's go there and try to build things that are compliant, and we can tap into this $330 trillion. Last year was consolidation. We did many good things, but we didn't attract a lot of capital and deploy. So Europe, for once, is more advanced. Of course, in Israel, we have also legislation. In few countries, we have legislation. But Europe is going to lead the legal framework of the world. And this is very powerful. Let's continue and let's try to build these things. I'm based in Switzerland, and in Switzerland also we have a lot of infrastructure building, for wealth managers, for banks, to be able to read the protocols, to be able to have the pricing. This is very important, and the infrastructure is tremendous work that we are building. Here you have a lot of ideas, but let's try to oracle those into the system.
Do you think it's going to be soon the time when DeFi and traditional finance, TradFi, if we want to call it like that, is going to be just finance? Meaning we won't call it decentralized finance, traditional finance, it will be just finance. It will be the same thing.
It is the same thing. They might just still call it traditional finance and decentralized finance. I mean, if you look at retail, they're still talking about online sales, which actually is all retail. But nevertheless, I think it will flow into each other. It's impossible if it doesn't. I mean, everything that's now in traditional finance will be there in decentralized finance and improved. So it's not not a question if, it's a question when, and that will go quicker than a lot of people think.
Cool. Lior?
Yeah, I do agree. It's like happened in the past in many other financial periods that we had innovation, and at the end it was part of the evolution. That's the same with DeFi, same with Bitcoin, same with everything. Yeah.
I mean, yes, if the vision is very clear, everybody questioned internet, and now everybody's in internet. Everybody questions the digital space. Everybody is going to be in the digital space. Everybody questions the Web3. Everybody is going to be in the Web3. It's up to us how we do it. So it's huge opportunities, but we cannot jump steps, and we have to work again with these 330 trillions, because they are the ones that dictate how we are going to do it. We can tell that, we can educate them. So it's not a matter of how, but it's going to be when. When it's going to happen, it's happening anyway.
I think also that today, nowadays, we also speak about Bitcoin, for example, as a financial asset. So this is completely a normal view. And also tokenizing assets, tokenizing commodities, tokenizing real world assets, tokenizing horses maybe, I don't know.
So we are already there.
No, imagine 10 years ago, Bitcoin was not, nobody, BlackRock, Fidelity, nobody will consider Bitcoin an asset class. Now it's an asset class, it's not question about. This is huge, this is very important. Let's try to do this with all the other things that we are presenting here to be normalized. It's not financial assets or not, this is going to be the norm. Let's try to do it and to follow, hopefully in the next 10 years, everything is going to be the norm, no?
Yeah, and especially if you look at Fidelity Digital Assets published a report last year, 2022, in the bear market. I think it was 58% of the institutions already had access to digital assets, which was 6% up of 2021. So even in a bear market, it's still growing larger. And I think 2023 will be a whole different market, and yeah, that will definitely lead to a lot of more adoption.
Thanks. We have 2 minutes left. We get a question maybe from the audience, if you're fine. Okay. Is there anybody?
Any questions? Shy group today.
Shy people. Okay.
If there are no questions, I guess we can wrap up a minute early.
Yeah.
Maybe you should ask the first question again, and how many people believe that the institutional money is coming.
Exactly, indeed, that's a good point. And after having listened to the panel, how many people now think that crypto is still attractive for institutional investors? Okay, that's cool.
Looks better, but we haven't convinced them
much
all,
better,
so we need to
looks
sit here
much
for
better.
another 20 minutes.
You did well, indeed, indeed. Thanks again, thanks to the panelists, thanks to the audience, and please enjoy the rest of the convention.
Thank you.
Thanks.
You're welcome.